Hey guys, make sure to hit like, subscribe to our channel, and hit that little bell for notifications when the new videos pop up. Hello and welcome to your monthly market report for October of 2022. My name is Josh Burnett with J. Burnett Realty Group in Charlotte, North Carolina, and today I'm going to walk you through three of the most important topics in the housing market. Will mortgage rates keep rising, what's happening with home prices, and what we're calling the shining star of the housing market, which is equity. And I have to say, this is probably one of the most important monthly market reports that you could watch in a long time. There's a lot going on in the housing market. It's a very pivotal time for both buyers and sellers. And basically, that's just because there's a lot of economic uncertainty around us. And quite frankly, it's causing a lot of people to push pause on their plans. So I want to start with a quote today that I think really helps frame that up. This is from Mark Fleming at First American, and it says, "When the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come." So it's a question of when, not if, for the housing market. You may be seeing words like crash, drop, falling, look out below, and all of these things that are causing fear and concern. And I want to help you bring clarity to that because as the market expert, I can tell you, in times of uncertainty, people follow the certain. This monthly market report is going to help set you up for success. So I'm going to start today by helping you answer the question, will mortgage rates keep rising? You know, this is a big part of the fear and uncertainty that a lot of people have right now in the housing market. Because let's take a look at what you're seeing in the media. You're seeing headlines like the U.S. housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. 30-year fixed mortgage rate jumps over 7%. These are all headlines that are out in the media right now, and it's the reality of a rising mortgage rate environment. And when people see this, they tend to get scared. They have that fear, that uncertainty, and it causes them to press pause. So being able to break it all down and explain what's happening, why rates are rising, what's expected from the experts, and of course, how we can help our buyers and sellers is mission critical right now. So let's jump into exactly that. So what we can see here, this is the Freddie Mac 30-year fixed rate from January of the beginning of this year all the way through today. And it says that rates have risen for the 6th consecutive week. Those are the orange bars that you can see to the right side of your screen. You can see how rates have been rising since the beginning of the year. And look at this sharp incline that we've seen just over the past 6 weeks. Rates are rising very rapidly. Now what you're seeing here is a look back. So this is saying that rates are an average of 6.7%. It's released right at the end of September, just before we made this video. And so that's a look back. So what we also know is that with rates rising like this, we may be seeing a number that's even higher than that today. It's very much the reality. But what we can see over time, regardless if it's this week or next week, is the trend is in an upward direction. What I want to do is take a look at what Sam Cater from Freddie Mac is saying about mortgage rates. He says the uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So significant increase, they're climbing quickly, and a lot of people are asking why. So let's look at what's happening. This is a quote from Odetta Cushy from First American, and it says, "The aim of the Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working." So what the Federal Reserve is doing, we know that they don't call mortgage rates, but what they're trying to do is bring inflation down. They're trying to slow the economy. So the moves the Fed is making to slow the economy is having an impact on mortgage rates. Mortgage rates tend to fall. This is all about inflation. As inflation is high, rates tend to be high as well. And we've said for a long time that inflation is the enemy of long-term interest rates, and that's exactly where we're at today. So the Fed making moves to lower inflation, that's what they're trying to do. And until inflation is down significantly, we see rates rise. So it's got an impact on the housing market, which is very intentional by the Federal Reserve right now. So she goes on to say that home sales, both new and existing, are falling. Builders have cut back production to rapidly declining affordability, and that's easing off on demand. We've seen that at a peak early in the year around March at 21% to just 16.7 in March. And that's partially because of interest rates rising. That's the reality that we're facing right now, and more so a trend over the last few weeks. So what's ahead? Let's see what the experts have to say. So George Ritu from Realtor.com says, while even 2 months ago, rates above 7% may have seemed unthinkable, at the current pace, we can expect rates to pass that in the next 3 months. And what he's really saying is, even a couple months ago, we were expecting rates to rise, but we weren't really even talking about 7%. So we're starting to see that tick upward, and that's really all due to inflation. We've been saying that for a while now. We've got to watch inflation to see how mortgage rates are going to respond. So in a rising rate environment, the best thing that we can do is help our buyers and sellers understand what's happening, why it's happening, and of course, what you can do to navigate this rising rate environment. So Jaya says this quote, and I think it's really powerful. It's also from Realtor.com, and it says, there's no doubt that the increasing mortgage rate will make home buying even more challenging. And we're feeling that affordability pinch right now, and that's super loud and clear. But buyers may still find opportunities as these changes coincide with the time of the year when buyers historically found the best market conditions to obtain more bargaining power. So what does that mean? Well, with rates rising, it's slowed down the pace of sales. At the same time, that's created more inventory or more options in the market. So buyers who may have been outbid more times than they can count, or have been searching for that home that they just couldn't find, that home may be out there right now. And the frenzy of those multiple offer scenarios is truly behind us. So that's an opportunity for buyers, and something that we need to be talking about as buyers hope to step into the market. Now, the challenge on the flip side is the affordability challenge. As mortgage rates rise, it becomes more expensive to secure a home loan. And that's the other challenge. So it's really important as well that you have a trusted lender that you're working with to make sure that you find the right mortgage, the right loan product, the right rate, and all of those different things that an expert can help guide you through. That's what we're talking about. In times of uncertainty, you need experts on your side to help you navigate this process. I've worked with Simon Brace with Movement Mortgage for years, and his honest and transparent approach is what truly helps people guide these difficult times. I've dropped his info in the comments below. And we also know that with affordability challenges that are out there, people may need more down payment assistance. There's tons of local and national resources that you can get that help make a big difference. So as people start to navigate this market, maybe even looking in a different area, a more affordable area is an option. There's so many things that we can help you with. But being that trusted advisor, being that knowledgeable broker, and that educator in your decisions is my goal and can really make a difference. The truth is, so many people need to buy and sell homes right now. The demand is really still there. It's just a matter of helping people navigate it in a challenging time, because informed clients, my informed clients, will succeed. And I want to wrap this section up with a quote from Mark Fleming at First American, because I think it says it nicely. It says, while mortgage rates are expected to continue to drift higher over the coming months, that's what we're seeing right now, much of the rapid increase in rates is likely behind us. So that's huge. That's great news. And nationally, while month over month house prices may decline, annual house price declines are not expected given the ongoing supply-demand imbalance and continued strength in the labor market. So that also opens up the question, what's ahead for home prices? So let's talk about that. You know, we started off this month talking about the uncertainty and how in times of uncertainty, people follow the certainty. And maybe one of the biggest questions around uncertainty right now is what's ahead for home prices. Lots of people are asking that. And really, I've got to be able to answer that question either with certainty or I'm not going to be able to do that. So my goal over the next few minutes is to give you what the experts are saying right now about home prices and really give you the best information that I have right now relative to home prices. So we'll start here. Dave Ramsey says the root issue of what always drives house prices is almost always supply and demand. We've talked about that quote before on the monthly market report, and no doubt what determines price in any category, not just real estate, is supply and demand. So the best way to show somebody that I'm working with, maybe somebody that's got that question, is what's happened to supply and demand in this country relative to real estate in the last few months. And that's what this slide is. It's the supply-demand ratio in real estate and how it's changed very quickly. It's a measure of showings, which is demand, and active listings, which is supply. So let me kind of back up and tell you, if I was sitting down to explain this to somebody, I would say, you know, the last few years during COVID, saw a market like we've never seen before. The meaning of home changed, rates dropped, and a lot of people said, now's the time we're going to buy a home because we need something different, or our family or our needs have changed dramatically. So what happened? Showings on the left there, that's the demand side, went through the roof. You saw pictures of people with lines all around homes and down the road and bidding wars, and a tremendous amount of demand was in the market. And what happened with listings was listings dropped. So we've seen a record amount of low homes on the market at any one time, causing bidding wars and price escalations and all of those things. But really, showings were through the roof and listings lower than they'd ever been in quite some time, and that's what happened. So this graphic is really the inverse of that. Showings are down nationally just over 12% right now, and active listings are up over 27%. That's not what we've seen the last few years. So this is really an inflection point in the market. The next piece around this is what the experts are saying. So I'm going to give you a range of experts here. I've got 4 quotes that we're going to go over, and I think that kind of sums up the real estate market. I'll start here with Ivy Zellman, somebody that we've covered before, and she says she projects the U.S. house prices will fall 4% in 23 and another 5% decline in 24. So she's kind of an icon in this business, and she's saying that home prices are going to fall next year and the following year. So a few things about that. She also predicted home price depreciation this year, and we didn't see it. And I haven't talked to her personally, so I don't know why she's calling for depreciation next year. But here's what I do know. When somebody like her comes out and says prices are going to drop 4%, they get a lot of media attention. So now I'm going to stack her projections up with all the other experts that we follow, and we'll take a look at that in comparison. But no doubt, news like that dominates the real estate cycle. And there's people like Ivy saying, hey, prices are going to depreciate. But let's hold on to that right there, and we'll come back to it in just a minute. George Vertu from Realtor.com says, not surprisingly, deals are not getting done with the sale of new and existing homes declining, incomes falling behind inflation, and still a limited supply pipeline. It's becoming increasingly clear that prices have to decline to restore market liquidity and balance. So George is basically saying that too. Hey, there's got to be a price decline. That's pretty clear. So let's continue that story. We've got another person saying a price decline in home prices. Third is Mark Fleming from First American. And he says, well, the market's considered overvalued. You may need to adjust to the not so new reality of rising mortgage rates. Housing market fundamentals still support a moderation of annual home price appreciation rather than a sharp decline. So we just talked about Ivy and George from Realtor.com. They were saying depreciation, and now we've got Mark saying moderation and maybe price appreciation. So what we're starting to see is the experts are saying a number of different things. Some saying depreciation, some saying maybe a marginal dip or appreciation, kind of anemic growth or very, very little. We'll talk about that when we compare all the projections here in just a minute. So the last one I want to share with you is John Paulson. He's a hedge fund manager. We're not at risk of a collapse today in the financial system like before. It's true, housing may be a little bit frothy, so housing prices may come down or they may be plateaued, but not to the extent that it happened before is what he's referring to, not like 2008. So we have sort of this range of opinions from experts about the market. Why is that important? Well, here's why. First, experts are saying, hey, this isn't 2008. Some are saying there's been a frothy market where prices in some markets are likely to decline. And then you have some saying, hey, I think we'll see prices moderate. So if we take this picture, and this is what I want to communicate with you today. This is what they are forecasting for prices. So we've taken a collection of these experts that we follow, we put them together, and we say, what does that show us? So here's a look at the 2023 home price forecast. When you look at Fannie, Freddie, MBA, Home Price Expectation Survey, NAR, and Zellman, there they are. So some are calling for depreciation, but some aren't. So who gets pressed when they say something like that, right? It's somebody like Ivy who says we're calling for 4% depreciation, not Fannie and Freddie who say we're going to have 4% appreciation. But if we take the average of all of these forecasters, including the depreciation forecast, we're still seeing maybe a 1.8% appreciation. So what does that look like for 2023? Best case scenario, probably around 2% appreciation in price. So I know people that I'm working with, people that are thinking about buying or selling, and what's going on with home prices. I want to be able to bring this to them and show them nationally what's happening. Now, critically, we've always got to look at our local supply level and see how we can apply that to our local market. So now I want to shift into that for a few minutes here and talk about what studies have come out relative to home prices in major metropolitan areas. And then we'll break down the home expectation survey, which does a really, really good job of sort of taking this average and what all economists or a group of economists are saying relative to home prices. So first is this slide here, Zillow's predicting appreciation. So for the next year, a number of metropolitan service areas, or MSAs, cities, regions, they've come out with this and said, hey, we believe in 618 MSAs, we're going to see appreciation. And in 257 of them, we'll see depreciation. But out of that 257, that depreciation is less than 1%, or maybe very marginal, 1 to 3%. So this is the reason that's so important. You've got all these forecasters out there talking about appreciation. And what happens in the news cycle, what happens is this gets delivered and it turns into everybody's calling for depreciation. And that's certainly not the case. Not everybody is, and not every area of the country. And that would be my message right now. So let's take it back to the market. It's critically important to understand and use this information to make a relevant market opinion. The second one is the home price expectation survey. And what we can see here is more forecasting of appreciation than depreciation. And every quarter they survey the top economists and experts in housing across the country and say, where do you believe the market is going? So if you look at the analysts and the economists and all of those that are a big part of this survey, you see more forecasting appreciation than depreciation. But we really want to look at those and say, okay, that's a reality, just like we saw in our Zillow study, and we're seeing that come through. So we're getting sort of a similar trend here, not to the degree, not that everybody's calling for it, but we do have people calling for appreciation in the home expectation survey. They even go further out to 24, 25, and 26, and I'm going to give you a first look at that here. So still depreciating, but in smaller slivers, but more appreciation every single year, meaning more and more people being optimistic about the market and appreciation. But at the end of the day, even in this scenario in 2024, 86% of the experts surveyed said that they're calling for appreciation. So you can see that here, 86, 91, and 96. So the important thing here to remember is what's driving supply and demand. The dynamics that we've talked about extensively in the report and the dynamics of supply in this country and the new builds coming to market, that's the reality that we're built under residential real estate, and the reality of demand, which is really driven by this millennial generation right now as they move through their peak of their home buying years. They're really the largest generation behind baby boomers to drive the market this way. So I want to challenge you with this. What's your story right now around home prices? And maybe there's three or a few different stories. There's one that says, I react to all the headlines. I see something, but I don't actually read the report. I don't dive deep into it or really understand it. And that's why we created this monthly market report, to give you the facts about what's going on out there. There's a lot of people right now reacting to headlines and thinking, I don't know what's ahead, which you can look and see this. Okay, clearly that's what's starting to happen. Then there's, I'm going to call it the blindly optimistic person, or the one that has blind positivity and doesn't look over there. Let's just look ahead and not worry about it. And I don't really think that's a wise way to go about it either. So we want to use relevant market information and facts to drive our opinion on the market. So we can take all this information that we've just talked about with home prices, and you can create your own relevant market opinion. And I hope that that helps you understand home prices right now, what experts are saying, and what's on the horizon for next year. So as we talk about a rising rate environment, the questions around home prices, a lot of people are asking, should I buy a home right now? And one of the biggest things to think about and remind ourselves is how home ownership wins over time. It truly is a long game, especially when we compare it to renting, and equity is a primary driver in that. So I want to start this section with this quote from First American. U.S. households own $41 trillion in owner-occupied real estate, just over $12 trillion in debt, and the remaining $29 trillion in equity. Quarter 2, 2022, saw massive 29.5% equity, lowest since 1983. So let's use this quote and break it down, and I think it says three big things. This is from Selma Happ, at CoreLogic, where many households, home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan-to-value ratios will provide many owners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demands, particularly if you're relocating to more affordable areas. So, first of all, home equity is a huge source of wealth creation. You know, the net worth of a homeowner is 40 times greater than that of a renter. So when you start to compare ownership versus renting, that's a huge differentiator in people's long-term wealth gain. Also, these record gains are giving you a great financial buffer. So we're not set up for a wave of foreclosures by any means, but we know that there are people that may be in a challenging situation, but now they have equity in their home and they can sell it versus going through a foreclosure or a short sale or facing that economic challenge. And the third thing you know is equity is really a fuel for housing demand. It's what's keeping people in the market and keeping that demand high. We talked earlier that when the uncertainty dust settles, equity is the driver that can help people fuel a move, relocate, or whatever it is that they need to do. Equity is huge in that. And what we can see from the latest release from CoreLogic is the national average of home equity gain across the country is over $60,000 just over the last year, comparing quarter 2 of 22 to quarter 2 of 21. So let's look back, and I hear a lot of things have changed since this data is released, but overall, about $60,000. That's a significant gain. That's a big cushion. So as we can see here, 60.2 thousand is the average equity gain for homeowners. That's 27.8% gain year over year. 3.6 trillion in equity. That's huge. In the bottom right hand corner, it says the total average equity per borrower has now reached almost $300,000 and the highest in the data series. So really similar to what we saw before. But $300,000 for the average borrower, the average mortgage property, is very significant. So when we look at the long-term gain, not the month-to-month fluctuations, homeowners are sitting on significant equity. That can really change their situation. It can change your life when you're going through challenging situations. So equity is that huge driver, and if we look at the percent change in home prices, this is where it becomes the long game. As we talked about what happened over the past 30 years, well, this is the percent change in home prices going all the way back to 1991. That national average home prices have increased by 290%. Homeownership wins over time in a 30-year period. Even with all the ups and downs that have happened along the way, prices are still up 290% in some places and significantly higher in others. So that's a big source of wealth and growth for a homeowner. And then the question becomes, if this happened over the past 30 years, do you think it's going to be any different over the next 30 years? And maybe that's the question, should you be buying a home? This is a really powerful image to help you make a confident decision. And history doesn't always repeat itself, but we can learn quite a bit from it. In over a 30-year period of time, home values have increased significantly. And you know, the alternative to this, we've said before, is rent. And look at how rent has skyrocketed over the same period of time, roughly 30 years. Here you can see how much monthly rents have increased, and that is exponential. So when you ask, should I buy a home? You can either put all of that money over time into rent and not get that return or investment, or you can put it in a home ownership and get that return on your investment. And that's huge. And everybody buys homes at different reasons in different times. And we understand that with the affordability challenges out there. But if we look at these exponential increases over time, I really want to show you how much power there is in home ownership. And it can truly change your life. There's also so many non-financial benefits to home ownership. And these are just a handful of them, but it's important to remind you that the security and stability that comes with this investment, the privacy, the personalized home improvements, truly making it your own is huge for somebody who wants to invest back in themselves and their communities. And your civic participation is a big benefit of home ownership. As you stay in your community and that place longer, you can add value to the community and gain value from them by being a part of it. There's proven health benefits to home ownership and even the financial education that comes along with that as you learn how to manage that debt over time and pass financial education and wealth down for generations. So as we look at everything that's happening in the market right now, we look at rising rates, home prices, and then really all the benefits of home ownership. it has its value over time. It's financial, it's non-financial, and it's truly changing lives. So with that, I'd like to wrap up our monthly market report. Thank you so much for joining us, and we look forward to having you back here again next month.